We've got the shilling sitting on a firmer footing. Let's focus in on the manufacturing sector. We've seen a stark contrast in how manufacturing stocks have performed this year, likes of Ebel and BAT really outperforming the overall NSE 20, whilst we had the likes of Unga really underperforming. What is your take on the type of factors that are going to shape the operating environment for manufacturers going into 2012?
Obviously, the cost of electricity comes to mind, and for that, you're really looking at East African breweries. The cost of raw materials for East African breweries, that's very key, and much more lately also we've seen that affecting British American tobacco. And also you've mentioned Unga Group, source of raw materials, that's a very big concern. Essentially they cannot source sufficient supply from the local market, and importing becomes very expensive, especially with regards to if you're looking at volatility of the currency and volatility of commodities across the markets. So essentially the sector is likely to benefit and maybe weaken depending on the companies that you're looking at.
As you say, there are a lot of factors there that really influence the operating environment. East African breweries is an interesting case given the fact that SAB Miller has been quite aggressive in terms of establishing its presence in Kenya, taking East African breweries head on in the region. You've also got Heineken, which has established an office in Nairobi. So from a longer term perspective, are you concerned about how East African breweries is going to protect its market share from these other key players in the brewery sector?
Yes, we are certainly concerned. I think if you're looking at 2011-2012 period, the earnings are going to be quite solid. But beyond that, we are quite concerned, especially depending on the competitor actions. But we've seen East African breweries take very important steps, especially around packaging. They're now introducing a canning line. They also have a glass bottling plant, and essentially for glass, it's according to the Alcoholic Controls Act, essentially you have to package your alcohol in a glass bottle, and that's really one of the only glass bottling companies in Kenya. And then you also look at the new brands that they've introduced. So if you're looking at Tusker, they've introduced Tusker Light, and they have Tusker Malt and your traditional Tusker. And essentially, this is essentially to cover up almost all the segments to ensure that even as these new competitors come through, they either have to experience low margins or take a very long time to claw back market share out of East African breweries.
Let's focus in on the oil sector, because interesting difference that we're seeing playing out between the stocks on that end. We've got Kenyan Market, which ends the year down 7%, whereas Total is down some 70% for 2011. And it's all really around how they've managed the price controls that have been established in the market. This is the first full year that we've seen those controls coming through. And it really appears that Kenyan has been much better at managing its profits in light of these price caps.
Yeah, certainly. It's ironical. Two companies in the same industry, but a very stark difference. Obviously, the first obvious one, if you're looking at Kenyan Market, operates across 9 countries. Total, mainly in Kenya, a little bit of exports. But increasingly, you're looking at the product lines, and you notice that, as of the first half, you could see Kenyan Market, the retail / commercial business only accounted for less than 15% of the profit before tax. A lot of the profits really came from LPG, fuel oil, which is used for electricity generation, and aviation, as well as the trading in absolute numbers. And obviously from the diversity of the different countries, that really helped Kenyan Market really with the price control environment.
Eric, before I let you go, one stock that you're bullish on for capital gains in 2012?
If you're looking at sort of the small caps, we like Unga Group. It's a bit volatile, but it's something we are looking at. We're still positive on Mumia's Sugar and Kenyan Market as well. I think Kenyan Market has, despite having performed well compared to the market, still has some room to go.